What's up, guys? Welcome back to Roensch Capital Charts. Today we're taking a look at Nvidia stock, ticker symbol NVDA, on a variety of time frames in anticipation of the next trading day, Monday, March 11th. All right, guys, Nvidia stock here today down $51.41 a share. That's 5.55% to the downside. It is down an additional, looks like we closed at 875.28. We go approximately to that level. And here in the after hours, down about another 2.5%. Listen, as always, you guys will hear me say this constantly if you continue to watch these videos, which I hope you do. By the way, if you haven't done so already, please subscribe to the channel. My goal is to hit 4,000 by market open Monday. I think we can get that done with your help. But we have to take that after hours movement with a grain of salt because volume is incredibly low. We didn't have, an after hours business-specific catalyst that drives volume that may be similar to intraday, like we may get on an earnings event or something. 99% of the time, truthfully, on any security, we have to take the after-hours movement with a grain of salt. If you've ever traded a stock after hours, which I used to do a lot more often, not so much anymore, but I have a lot of experience in the after hours, and the truth is, volume is so low, it's almost scary how easy it is to move around a stock with not that much size, honestly. But let's get started here with our daily analysis, starting with our daily ritual. Important today on this pretty dramatic pullback here. Our volume profile analysis on the 5-minute chart. Let's take a look. What we're really looking to do here is try to pull out any bias that we can from the biggest sample size of the market that we got on the obvious move. So I'm looking for big changes in volume that held consistently, that correlate with obvious moves in stock price. But here's the kicker, and here's what a lot of people miss. You have to look at this through the lens of, was it contextual for that time of day? Just because we had a lot of volume off the open, we always get a lot of volume off the open, right? Was it more than what would be contextually expected on any average day? That's the key. So looking here today, I think really the one single move that I'm most interested in is going to be this move here, okay? Many consecutive red candles. This is where kind of the exhaustion pullback began. One little green candle to break that up, and then a continuation to the downside. Let's take a look here, and you can see that looking at the move, I actually expected the volume profile to be a little bit more consistent. However, we did see some big red candles mixed in there, a little bit of consistency here right off the bat when that pullback really started to take form. And we never really saw big drops in volume mixed in. And the volume essentially for the entirety of that move was out of context for what is expected on any given day. So the truth is here, around this time, we did see a little bit of that exhaustion pullback, pick up momentum there, and a larger sample size of the market at that time agreed that Nvidia belonged a little bit lower. However, I think what we need to do today is zoom out to compare this to Thursday's trading day. And if we look here, you can see the entirety of the day, we saw much larger volume than on Thursday's trading day, which was, somewhat more compared to today of an average trading day. Pretty obviously, right? I'm sure Nvidia was hitting loads of scanners all across the world today. It popped up on a few of mine. And the truth is here, when you see a little bit of a pullback there starting to form and a little bit quickly on higher volume after a morning test higher, okay? And I think really the area that I'm kind of looking at here, let's just zoom in, is kind of this candle here. When you start to see that take shape, again, on larger volume after a nearly 20% gain in the last 6 days or so, you're going to see some players, some institutions, some funds doing some profit taking here. And that can just snowball into a bigger day like we saw today. When you get that kind of momentum going intraday, especially in the first 2 hours or so of the trading day when there's still a lot of eyeballs on the market, this kind of snowball effect, especially after the run that this stock has had, it's only natural. And that goes for both bearish and bullish moves, by the way. You can see this kind of momentum pick up to the upside as well. However, I want you guys to be aware that, the longer you spend looking at the market, you'll start to realize that the psychology, things tend to happen quicker to the downside than they do the upside. right? It's the old saying, stairs up, elevator down, or window down in some cases. But I really don't want this to get taken out of context, which is why we're going to head on to the 30-minute chart here. Now, you can take a look. We're just looking at the last 5 trading days. Okay, actually, if we can zoom out a little more, let's take a look at the last like 6 or so trading days. We look down here. You know, up until yesterday's close, we're looking at a 17% gain. We go back to the day prior to that, up until yesterday's close, we're looking at nearly a 20% gain. To the peak of today, that is a 25.5% gain, heading into $975, $1,000 a share. Now, this is a really important point. The momentum itself is not the trigger. The upside momentum, I mean, is not the trigger. It's not like one of those, oh, well, it has to pull back at some point. It's not the mentality. The psychology here is the move taken in context with the downside momentum that you started seeing early in the day, about an hour and a half into today's trading day. That triggers one of these snowball profit take mentalities, right? So here on the 30-minute chart, of course, I have the most important self-fulfilling prophecy psychological levels pulled up that we're looking at every single day. That's going to be the 50-period moving average, that white line, and the 200-period moving average, the gray line, which Nvidia did happen to give up essentially one of those intraday. Again, take after hours with a grain of salt. It is now lower than the 200 after hours, but again, on very low volume. So for me, that after hours move, it's just whether it's upside or downside, confirming a bias or going against your current sentiment, it's never as definitive as an intraday move, unless, of course, again, we're seeing high volume that matches or exceeds the intraday volume. So listen, bulls, heading into Monday here, here's what I'm really looking at on the 30-minute chart in particular. Just a hold. I'm not really going to say a reclaim because, again, this occurred after hours. A hold upside of the 200-period moving average on the 30-minute is a great start. We did essentially bounce off of that intraday, but you'll also notice that the 50-period is starting to curl downside hard. So bulls, honestly, what I would really look for on Monday, because as of right now, with the after-hours price of the stock, because of course it is the real price, no one's denying that, it's about a 7.7% upside move to that 50-period. So if Nvidia is able to reclaim the 200-period, which again would be a good start from a bullish perspective, if we were to see a continuation downside of the 50-period while that's occurring, we could see the 50-period get down below $900 a share, which all of a sudden makes that a lot easier or a lot less of a required move to start to look to reclaim that. Because oftentimes on days like today, you get second day volatility, a continuation of the volatility of sorts, not necessarily in the same direction. However, that momentum, of course, is there. From the current price, we're looking at about a 5.5% upside move to that $900 area, which we may end up seeing that 50-period, again, getting down toward, at, or below come Monday if we see a continuation of that downside momentum in the moving average. And it's less than 3% actually from the closing price to that $900 a share level. So I actually wouldn't mind. This goes against what is typical on a chart analysis like this. But from a bullish perspective, I actually wouldn't mind seeing that 50-period get downside below 900 to make it a little bit less required out of the stock to reclaim both of those and kind of get back on our feet here after a profit take kind of snowball day like today, which, by the way, on big runs like this, it's inevitable in a stock like this. It's just, you don't see it coming until the intraday momentum triggers it, which we, again, saw about an hour and a half after the open here today. Which is also why I think it's really important if you are a kind of trader who likes to have their finger on the pulse. If you're just a buy and hold kind of guy or lady, that's cool. You don't really have to worry about these kind of days or big upside days too much if you believe in the company long term, because of course long term the fundamentals take over. But if you're more of a midterm or shorter term trader, which I know many of us are, it's important to have alerts set on tickers that you're primarily watching. But still, here on the 30-minute chart, from a bearish perspective now, bears, again, I'm not comfortable saying that Nvidia has claimed the 200-period moving average to the downside, because that, again, happened in after hours here. So I think the primary goal, at least in particular on the 30-minute chart here, come Monday for the bears, is going to be a hold of that 200-period as a resistance level. Honestly, ideally, a flattening out of the moving average, a re-upside test of that level, wherever it may end up. The 200-period moves slower than the 50-period, so it's a little easier to predict where that may be, somewhere in this region, okay? maybe a 1.5, 2% upside move to make a retest of that. Bears, I would honestly be okay with that as long as you were to see maybe a lower volume upside test and then a high volume pull down. Okay, bulls, of course, just a high volume pop up through that level. Even a retest I'd be cool with as long as it's on lower volume ideally, and then a higher volume up move toward, wherever that 50 period ends up here on Monday. All right, lots to talk about here today. Let's move on now to the 4-hour chart and take a look there. This is really interesting, and I'm sure a lot of people may be missing this here today if they're not looking at all the time frames, which we always need to be doing. Trading off of a single time frame is, I think, very irresponsible, kind of a lazy way to trade. We don't have to do that. It doesn't take too much to look at all the time frames, at least all the most popular ones, and just consider where everything lies on each time frame. If we look at the close price, of around 875, we're still approximately a 4.1% move away from the 50 period on the 4-hour. But here in the after hours, we kind of closed that gap and we're down to about a 1.5% move to the downside to test that 4-hour. So I'm actually not totally disliking that. Now, bulls, do you guys understand why every single day in every analysis that I do, really on any ticker that's had a recent big upside move, I'm always saying, let's get the moving average, the psychological self-fulfilling prophecy level, which by the way is all they are. And that's all I would want them to be. When you see a big upside move in the stock, get those things up, get some feet up underneath the move as quickly as possible, add a psychological barrier. We want as many as possible underneath the new higher price of the name, as many as possible, as quickly as possible. Of course, on the 4-hour chart, that 50 period is a heavily watched moving average all across the world on this time frame. And of course, it's going to take a little bit longer since Nvidia has been on such a tear as of late that take longer to get upside, right? Because it's a slower moving average. However, today's pullback has closed the majority of the move, or of the gap, I should say, between where the stock price was and where the 50 period moving average on the 4-hour chart, again, a heavily watched average on a heavily watched time frame, is. So come Monday, if we see a retest of that level, now bulls, ideally you would, you want to kind of reclaim what we gave up in the after hours, again, on low volume, take that with a grain of salt. But upon the real test, which is going to be the open on Monday when the volume really pours back in, if we see a test of this 50 period here on the 4-hour chart, bulls, going to want to see a high volume, I'm talking like as high volume as possible, rip away, right? With a big sample size of the market agreeing, rather definitively that, hey, we're going to hold that, this was a pullback to the 50 period on the 4-hour. We're not really ready to give that up. We're not ready to go that far. And then you see a lot of buying and adding in to that high volume bounce away from there. Okay, bears, you're obviously looking for continued momentum. Again, high volume as possible, just a crack downside, a clean break through that 50 period. If you end up seeing a retest, you'd want that ideally to be on lower volume. Okay, so what I mean by that is a crack downside below, retest on lower volume, and hard downside break on, again, higher volume. Okay, very common setup. That can be applied to, a lot of different setups. That mentality of high volume move, low volume retest, high volume move back in the original direction. Because what that really is, and you'll find that this is my belief system in a lot of TA, again, it's all self-fulfilling prophecy in my opinion. What that really is it's a bigger sample size opinion of the market. That's measuring something real, right? Because, for example, if we got a high or a lower volume move to the downside for a retest of that 50 period here on the 4-hour come Monday, and then you see kind of some average lower volume hanging out around that level, and then a higher volume bounce that really increases in volume as the bounce pulls away, what does that tell us? It's not a chart pattern. That is psychology and action being taken on psychology, where you have the bears being exhausted into the sell, bulls not quite convinced yet. And then as the average volume comes back in upon the respect and the bounce starts to occur, the bears are really exhausted, but the bulls pour in. Okay, and the higher that goes, you'll notice the volume goes higher. What you're getting is FOMO buying, more and more bulls being convinced, and the volume is also being propped up by, you're probably seeing some shorts entering, trying to fade that bounce. And the higher it goes, the more of those shorts get stopped out, which only increases the buying pressure and only increases the volume. There's no magic here. It's just psychology. Okay. Now, the most important chart of all, I know this is a long one here, but there's a lot to talk about. We have the daily. Now, again, understand the daily chart's not going to show after hours. After hours, we're at approximately 25 points lower or so. The story here on the daily, though, I think is really obvious come Monday. The stock closed at 875. It's currently at about 850 in the after hours. Bulls, I'm looking at this with two things in mind come Monday. A hold of 850, I would think, is a rather power move because you're basically killing off any momentum, any second day continuation out of the bears. You're essentially rendering those bears exhausted with a hold of 850. Okay? And a higher volume bounce back up to 900 like we've been talking about, and a reclaim of 900. Now, I want to be very clear about this because I think some of the viewers may be misunderstanding when I say a reclaim. By a reclaim, I used to say more commonly in the videos, I'm a 2 to 3 trading day kind of guy. I need more of a time frame on big claims of levels. I'm talking at least a single close. For example, if we were to see a bounce from here come Monday off the open, it bounces to 904 and then fades the rest of the day. That is not what I mean by a reclaim. By a reclaim, I mean a lot of volume occurs above that level and ideally closes above that level for, minimum a trading day or two. Intraday tests are not reclaims, especially when we're looking at big macro levels on the daily. Closing levels are much more definitive, and on a number of trading days, the more trading days that occurs on, the more definitive that becomes. So again, bulls, hold of 850, a break above 9, a lot of time spent above 9, a lot of volume pouring in above 9 during the intraday session, and a close above 9. And listen, that would be a power move out of the bulls. You're essentially, again, rendering the bears exhausted and taking control of the stock again, killing that, what a lot of bears expect, second day momentum continuation. Bears, for you guys, any test of $900 a share, maybe in the morning, intraday, you're going to want to see a hard fade. Okay, kind of like what we saw today, maybe not quite as dramatic, off of 975-ish. Because the bears, your target come Monday is a crack downside below 850. Again, and a hold, not just an intraday test. I'm talking a hold. Now, implied volatility. Okay, it is up after today's move. Understand, if you are holding options that you purchased, you did not sell them to open, you purchased them. Okay, the higher implied volatility goes in reference to your intended trade time frame. So compared to the time frame that you intend to hold those contracts for, the higher that IV level goes, the higher the potential risk of IV crush. Okay, you need to understand that it's an incredibly important part of trading options that too many options traders just completely overlook. Now, let's go to my favorite part of the video here, which is what was the bias out of the options traders today? This is all volume from today, Friday, as we head into Monday. This is a big sample size. This is much more volume than we typically see on Nvidia. 4.07 million total contracts traded here today. 2.55 million of those were calls, and 1.52 million of those were puts. So we are seeing a relatively heavy call side bias on a lot of volume, a big sample size here on Friday. And take a look at this. The delta ranges, all 5 delta ranges. That's out of the money, at the money, and in the money. On average, it's going to be a shorter term sentiment, more of a midterm, and a longer term sentiment. All 5 ranges leaning call heavy on Friday. But the one that I'm primarily looking at here is that 0 to 20 delta range. That's going to be the shorter term, speculative, you could almost argue gambly style calls and puts. Those are those short term speculators. 1.09-ish, 1.09 million calls, 804,000 puts. So a slight call bias on that 0 to 20 delta range ratio, but a rather heavy call side bias on the overall call put ratio with every delta range leaning call heavy on Friday. Listen, before you head out, be sure to comment your ticker, which is your vote for Monday's wildcard stock that I will cover. Whichever ticker gets commented the most across, the weekend's batch of videos will be the wildcard stock that I cover on Monday. So just comment your ticker down below before you head out. And by the way, if you got value out of the video, please subscribe to the channel. I greatly appreciate it. And I'll see you in the next one.